This is your first appearance before the subcommittee, and we welcome you.
Thank you, Mr. Chairman. Chairman Lewis, Dr. Bustani, members of the subcommittee. Thank you for the opportunity to appear before you today to discuss the subject of the Internal Revenue Service's administration of the First-Time Homebuyer Credit. Based on the administration of the credit to date, I am very concerned about the IRS's ability to effectively administer the credits that are claimed before the December 1st deadline, let alone any credits that may be claimed within future extended deadlines. The original credit was enacted in July of 2008, and my office provided our first memorandum to the IRS with recommendations on administering the credit November 25th, 2008, which was before the start of the 2009 filing season. Despite that effort, several key controls to ensure the accuracy of claims for the credit have still not been designed or implemented. The President has called on federal agencies to ensure that Recovery Act funds are used for authorized purposes and that every step is taken to prevent instances of fraud, waste, error, and abuse. I am very concerned by the findings of our audit given the stakes that are involved. The law requires that to claim a credit, a home must first be purchased. However, we identified more than 19,300 electronically filed 2008 tax returns on which taxpayers claimed the homebuyer credit for a home which had not yet been purchased, but allegedly would be in the future. We alerted the IRS of the need to validate claims for the credit in the November 2008 memorandum. However, the IRS disagreed with our recommendations. Had the IRS timely implemented our suggestions to both capture and use the purchase date information from the forms taxpayers submit in order to claim the credit, these claims would not have been paid. The amount of the credits inappropriately claimed in this instance totaled more than $139 million. We have yet to determine the number of paper returns with similar claims. To its credit, the IRS has now implemented filters to reject claims with future purchase dates. IRS management, however, indicated that they had not decided whether to go back and review or correct the more than 19,300 electronically filed returns that were processed before the filters were put in place, or to identify how many paper filed returns with future purchase dates were similarly processed. We found that the taxpayers who had indications of prior home ownership within the preceding 3 years were claiming the credit. These indicators included deductions for home mortgage interest, real estate taxes, deductible points, and qualified mortgage insurance premiums. Now, while these entries indicate home ownership, the homes involved may or may not have been the taxpayers' principal residences, so the deductions should not automatically disqualify the taxpayers from receiving the credit. However, we believe these claims warrant scrutiny by the IRS. The IRS reported that as of May 17, 2009, it had initiated the use of filters to identify such taxpayers for examination. Unfortunately, more than 70,000 questionable claims totaling almost $500 million were processed by the IRS prior to the initiation of its examination filters. We reviewed the tax accounts of a random sample of these taxpayers. None of the accounts had received scrutiny from the IRS relative to their claims for the credit. In addition, we identified more than 580 taxpayers younger than 18 who claimed almost $4 million in first-time homebuyer credits, the youngest of which were taxpayers who were 4 years of age. Contract law generally exempts children under the age of 18 from being bound by the terms of a contract. It is highly unlikely that these taxpayers would have entered into arm's length transactions for the purchase of a home. We identified more than 3,200 taxpayers claiming the credit totaling over $20.8 million on tax returns filed with individual taxpayer identification numbers, ITINs. An ITIN does not indicate that an individual is authorized to live or work in the United States. The Recovery Act specifically denies homebuyer credit to individuals who are non-resident aliens. We also determined that most of the approximately 48,500 taxpayers who purchased a home in 2009 but claimed a credit of $7,500, even though they may be entitled to a credit of $8,000, did not have their IRS accounts properly coded to indicate that their homes were acquired in calendar year 2009. Proper coding is significant because it is an indicator that the IRS will use to distinguish between taxpayers who must repay the credit over 15 years and taxpayers who will not be required to do so unless they sell their homes within 36 months. Unless the IRS properly codes these accounts, these taxpayers may eventually be subject to IRS collection procedures. Finally, Mr. Chairman, it is also very troubling that my auditors discovered that among those who apparently wrongly claimed the credit are a number of Internal Revenue Service employees. These cases have been referred to my Office of Investigations for review. Mr. Chairman, members of the subcommittee, this concludes my oral statement. I would be pleased to answer any questions at the appropriate time.
Well, thank you very much, Mr. Inspector.